Hey all, thanks for joining me. It's Saturday the 5th of November. I've just woken up actually in Thailand. It's quite early in the morning. What time is it? 6 a.m. I've been looking at these markets and just have gone absolutely crazy since that CPI number last month, US CPI number. The markets really aren't making a lot of sense. Even technically, they're not making a huge amount of sense. Maybe you can see more clarity than I can, and if you can give me some comments in the box below. I'm going to start with gold, silver, and oil. We'll have a look at these commodities and see what's going on. So I'm looking at gold here, as you can see. Now, the bit I'm focusing on is this downward channel that we've had since, let me just see what the date on this is. Okay, so that's since April. A very clear downward channel that gold has been in. Now, I identified you know about the double top pattern. I've told you about that. Actually, I'm going to show you again because it's a little bit confusing, if I'm honest. A little bit confusing. It's enormously confusing. Now, we've got this, what some people are calling a cup and handle. I don't believe it myself, although I do think gold's going up. So, but for different reasons. Now, we've got this, okay, let's call it a cup and handle. Let's see if it is. I mean, I think the cup failed because, of course, we broke below this low here. If I've got that wrong about the pattern and you know better than me, let me know. Let me know why this is still a cup and handle pattern, even with this this month after month of falling prices. This is the monthly chart for gold I've gone to now. Now, for me, more importantly, is this double top. As you know, I'm sure if you've been following me for a while, and if you're a subscriber, you definitely know. Okay, big double top, broke the neckline, broke the 200-day moving average, broke the 38.2% fib at 1678, and for me that was it. The gold was just starting to go down, but we've got this double bottom here. It's quite bullish candles on the weekly chart. I'll just open it up so you can have a look. Quite bullish candles on the weekly chart. I mean, we've got long lower wicks, and we've got a green body on the candle. But we're still trading below the 200 week moving average. We're actually just coming back up to that 38.2% fib that I talked about, which is here. Hang on, I need to move the chart in a bit so you can see it. There we go. There we go. There's a 38.2% fib. Okay, where do I need to go with this now? You can see that we are testing testing the 38.2% fib. We haven't got quite close to the 200-week moving average, but we do have this double bottom in there. Now, I can't for the life of me understand why we've got buyers in at around 1620. I can't find a level there that's telling me we should be jumping in. The only thing I can find, and I'll show you, is a big fib level around 1642, 1643. Now, I guess that's within, you know, a decent margin of error. What is that, 2-3% of that level? So maybe someone has decided that they want to start buying around 1640, and by the time they turned the market, it traded down to 1620. But obviously prices have been down there for 3 times now. Okay, I need to go to the daily chart. Hang on. Okay, daily chart. Here we go. So right now we do have a double bottom, which I have been talking about for a while, so that's not a big surprise. And it is a very valid, genuine double bottom, because look at these big bullish candles. The first one, huge engulfing candle, bullish engulfing candle, took out 2 days of prices. We went up. Then we came down, the retest in October. That was September. In October, we got a retest. We've got, again, very similar, almost identical actually, big bullish engulfing candle. There we go. We really need to blow this up, don't we? Bullish engulfing candle here. Again, taking out 2 days of price action losses. Now, we didn't get quite the reaction that we got from the first bullish engulfing candle. It was a bit pathetic, really. No follow through. We couldn't get through the trend line, which goes back to April, as I said back here. There's your trend line. So we reversed from there. Slightly confusing, I thought, but look, when you get these patterns, the market doesn't automatically take off. I thought we might dip a little bit, dip 50%, 61.8%. So I thought we might get back to here. And that wasn't a huge surprise. Big green candle. I thought, okay, here we go. Now we're going to start moving on the double bottom, and we're going to take off. We rock it up. We get to 1669, and then we collapse and go and retest the previous double bottom low. That was on the release of the rate hike announcement, and then the release of the Powell speech afterwards, talking about how the market reaction didn't understand what he was saying. You know, interest rates are going to go up. They're going to keep going up. They're going to stay up. I don't know why the market doesn't understand this. He's been very clear about this for months, but for some reason the market seems to think that, oh no, he's going to pivot. He's not going to pivot. He's not going to cut rates. He's not going to pause rates. You know, the Fed need to keep raising rates, and that was proved yesterday with the unemployment number. Strong employment. There are jobs. Average earnings are going up. This is not, that at least doesn't indicate that we're in a recession. Maybe we are about to enter a recession. Maybe we are in a recession. Yes, the housing market is going down, as it should do. I mean, it was ridiculously over, the huge bubble from ridiculously low interest rates. Of course, house prices are going down. They need to go down. It's necessary. Interest rates are normalizing. Interest rates are not going up temporarily to 4 or 5%, and then they're going to go back to 1 or 0. That's not going to happen. This is just a normalization of interest rates. Okay, now, so we retested a double bottom low. Now, triple bottom is a very rare pattern, very rare. But when it happens, it is extremely bullish. I was looking for a bullish candle off on the retest of the double bottom low. As you know, I talked about this in the chat group in the Telegram chat group. And I also pointed out the fact that we've got this positive divergence. Look, the slow stochastic only got down to 35. Very, very clearly looking quite positive on the slow stochastic when the price was retesting the previous low. Now, I was kind of looking for a more bullish candle than that, but we got the long lower wick. We got the small red body. It was a hammer. Okay, fair enough. That had to do. And here we go. Look, I didn't know that this was going to happen yesterday. If you ever needed confirmation that gold has turned a corner and we're going up, there you have it. Now, if you did buy in on the double bottom low, and if you did follow, my guidance in the report, I wasn't 100% convinced. I will be honest. I wasn't like screaming from the rooftops that gold is about to absolutely rocket because we were in a bear trend. I wasn't sure if I could trust the triple bottom. The positive divergence isn't something that is a reliable signal. But look, we've got a bullish engulfing candle on the weekly chart now. Okay, we might be 70 points off the low, but when you look at the chart, we've got a hell of a long way to go in gold. Now, really nice bullish. We haven't had a bullish engulfing candle on the weekly chart in gold for quite a while, so I think it's very significant. There it is. I'm going to really blow this up so you can have a proper look. Okay, there we go. There is your bullish engulfing candle on the weekly chart. Actually, I think this low at 1615.59. Yeah, so we had a low that was lower than the previous low just by a couple of points. Fortunately, we didn't get freaked out and start selling on that break. And then the market, of course, has rocketed on Friday, taking out the previous week's high, taking out the previous 2 weeks' high. So a very big bullish engulfing candle. And I think that is what is absolutely key now. I think gold really has turned the corner. And this is going to be the start of a very significant bull run in gold. Now, I've been bearish of gold all through the interest rate hiking period. And I know we're still going to be hiking interest rates. But I've got to say that this is obviously, you can see it yourself. It looks good. We've broken above this trend line going back to April. So that's a multi-month trend line. We've got straight through the 50-day moving average and closed above it. Now, we closed above it here at the beginning of October, but it didn't last long. The market turned around and sank. But I think this time we're going to get through it. In what month is this? In June, the 50-day moving average, the black line, acted as resistance. We didn't manage to hold above it very well here, did we? But look, the 50-day moving average has acted well as support and resistance. We're now through it. We've closed the day. We've closed the week above it. I think it's important. I think gold is really going to go. Silver rocketed as well. The picture is not as clear. What can I show you? Well, look, this is the weekly chart. Doesn't really make any sense to me at all, if I'm completely honest. I can't make sense of it. It's all over the place. There's no pattern. There's no trend. Look, the moving averages, at least the 200 and the 500, have been flatlining for a while because it really hasn't had any clear direction. I'm going to just quickly look at the monthly chart, see if I can make some sort of sense of it. And look, I really can't. Big collapse, and they're just mostly sideways. 50% retracement, and then look. I'm not even going to try. A nonsense. The whole chart is an absolute nonsense. I wouldn't have a clue what to do with it. Okay, weekly chart. There's no candles here. There's no pattern. No double bottom. It's not even a flag. It's not a pen. It's nothing. Okay. Sometimes charts just don't make any sense. Okay. If you've got can make some sense of that, please put some comments in the box. I'd love to find someone's perspective who can explain to me what is going on in silver. Rounding bottom, no. Inverse head and shoulders pattern. I guess I could argue that we have one. Anyway, look. We've broken above this channel and we've pushed higher. I'm going to take that out now. That's not particularly relevant. I could argue, I guess, that this is the left shoulder ahead, a very awkward looking right shoulder, and a break above the neckline at 2150, which is also the 200-day moving average, would be the buy signal. And that's my best guess. But anyway, the thing is, silver's now rocketed off the 50 and the 100-day moving average, and we're heading up towards the 200. At this rate, we're going to get a positive cross, moving average cross. We're going to get the 50-day moving average crossing above the 100-day moving average. Yeah, in a few days probably. That will confirm something a little more bullish. You know, we didn't even have some sort of positive divergence on the slow stochastic, so I really had nothing to go on. I'm really only bullish of silver because I think gold's going to take off. But you know, when you've got a bullish candle like that, maybe we've got some sort of short squeeze scenario going on in silver. Break above 2150 should be the next buy signal. The thing that definitely has broken out is oil. So I have this triangle. Here's the lower. Let me just open this up for you. So oil is in a longer term bull trend. Had a bit of a correction. Now here's what I think is relevant. This upper trend line here and this lower trend line here forming a triangle. You know, you could almost argue it's some sort of pennant, but pennants are not relevant after in a correction. So we've now broken above the trend line, which is around 90.50, and it looks like oil will resume the move higher. That's not going to be good for inflation, is it? We're testing the 100-day moving average, which is at 92.46. We've closed just above there, I think. So it looks pretty good. I think the oil market is going to now resume that longer-term bull trend. Fundamental reasons, haven't really got any. But it does look like we bottomed. And can I argue that that's an inverse head and shoulders pattern? Could I argue that this is the left shoulder, the head, the right shoulder? Yes, I could. Can I argue that that line here in the triangle is the neckline to that inverse head and shoulders pattern? I think I can. It's quite a big pattern when you compare it to the move down, but it's a significant move down. You know, it's a 1, 2, 3, 4 month move down. Okay. Well, actually, you say that, but the head and shoulders pattern is then forming over like a 3-month period. But anyway, a head and shoulders pattern is relevant because it shows a trend change, and it shows that we're getting higher highs and higher lows, and we're definitely getting that. Now we're broken above the trend line at 90.64. That seems to be the exact value. We're through it, and I think we're going to go. Let's just have a look at the weekly chart so we get a longer term perspective. We can have a look at the bull trend that we are in oil, of course. Well, there you go. Look, I've taken that from that crazy time when oil traded down to minus $40. Off we go, very clearly in a bull trend. The correction broke the 23.6% fib, but tested the 100-week moving average, and there are some trend lines there that you can see that captured it as well. Then we started the recovery, but the recovery really was more of a consolidation of that correction, and now we're breaking out of that consolidation, and I think we're going up. We've got the 50-week moving average at 94.37, so that will be the next target. Can we go to? Well, we've got the October high, which is 93.64. We may pause there, but I wouldn't be a short seller myself. It looks like eventually we're going to get up to 97.00, let's call it 97.00, 98.00. So that's this trend line. There's a fib there, 38.2% fib, and it's the high here at the end of August. That looks like a reasonable target. So in my opinion, we've got a good 400 pips, 550 pips to go on the upside before we really test any resistance at all in crude. Obviously, we've got support around the 90.50 area, which would tie in nicely with this high as well. What's this high? 90.36. So if we dip back to 90.50, 90.30, that should be the big support level of the week. And we should bounce off that trend line. If we don't, of course, well, all bets are off for oil pushing higher. That would have proved to have been a false break above the triangle. So that's my best analysis for those three commodities. Please give me a comment if you've liked what I've said, and if you agree, that would be great. I'd love to hear from you, or if you've got your own opinions, I want to hear that too. And please do like, share, and subscribe. As always, I've got some offers in the description box, so please do read that. And I'll tell you what else, I'll put some analysis, some written analysis in this description box, so make sure you do read that.